DOGECOIN has shown multiple bullish technical cues this week, even as its fundamentals remain largely driven by market sentiment. On shorter time frames, the TD Sequential indicator recently flashed a buy signal on DOGE's 4-hour chart, suggesting a short-term rebound may be in the works. At the time of that signal, DOGE was trading around $0.218, holding near a key support zone. Traders note that such TD Sequential buy setups often precede brief reversals if broader sentiment is constructive. In fact, Mr.Crypto reports that traders were closely watching if this signal can trigger a bounce that stabilizes prices and sets the stage for a stronger recovery. In other words, the technicals hint that DOGE may consolidate or recover. In the near term, provided selling pressure does not overwhelm it. At present, DOGE is hovering just above 21 cents, a level that appears to be an important short-term floor as recent price swings between $0.208 and $0.216 show. On the daily chart, a classic cup and handle pattern is taking shape, which technical analysts regard as a bullish continuation formation. The cup bottom was formed during DOGE's protracted pullback, and the recent trading range looks like the small handle of that pattern. DOGE can break above the handle's neckline roughly in the 24-28 cents area. Chartists project a significant rally could follow. Specifically, key resistance levels are near 0.2 for $4 and $0.277. Clearing both might send DOGE toward the cup's target around $0.42. This aligns with CCN's analysis that the cup and handle could target roughly 41 cents and even 70 cents in a strong breakout. Of course, that is a hypothetical extension and depends on a clean breakout. The opposite outcome is also noted. If demand suddenly wanes or the breakout fails, CCN warns DOGE could fall sharply, potentially back toward the $0.17 level observed at recent lows. In short, the pattern offers a possible path to much higher prices if bullish momentum holds. But it carries clear risk of a deep pullback if it does not. Sentiment on derivatives markets has been heavily skewed toward bulls, which underscores why many analysts are optimistic. Data from Binance's perpetual futures show roughly 75% of active DOGE positions are long betting on higher prices versus just 25% short. This lopsided ratio implies most traders expect a recovery. On one hand, such heavy long positioning can actually help drive DOGE higher. Longs add buying demand and provide liquidity in up moves. As Crypto notes, the strong positioning provides liquidity support that could aid in pushing DOGECOIN above immediate resistance. On the other hand, it is a double-edged sword. If DOGE does sell off, spike in liquidations of those long positions could exacerbate the decline. In fact, analysts explicitly warn that heavy long exposure can increase the risk of cascading liquidations if price retraces. This means a sudden drop would force many longs to exit buying back DOGE, accelerating selling pressure. Recent on-chain and futures data confirm this caution. During August 24th to 26th, DOGE saw intense volatility. CoinDesk reports that DOGE swung within a roughly $0.013 range and then consolidated near 21 cents over that period. A massive 900 million DOGE whale transfer into Binance on August 25th coincided with a sharp drop from about $0.218 to $0.208, with $1.57 billion in volume. The result was a brief capitulation, which lowered open interest in DOGE futures by around 8% as leveraged traders cut risk. In other words, many speculative positions were unwound amid that turmoil. Nevertheless, large holders remain active. CoinDesk notes on-chain data showing whales actually added roughly 680 million DOGE during August, offsetting some retail selling pressure. In sum, the recent volatility highlights that DOGE can move. Suddenly, a drop below strong support caused pain for some traders, but it also shows whale buying at lower levels. All of this has left DOGE trapped in a relatively tight $0.215–$0.225 range. This $0.215–$0.225 region has turned into a strategic battleground. Liquidity analytics from CoinGlass reveal huge clusters of stop orders there. Short sellers have placed many exits around $0.215, while longs are clustered near $0.2 to $5. These liquidation hot zones mean that a decisive break of either mark could trigger a cascade. Falling decisively below $0.215 would likely liquidate many long bets and steepen a sell-off, reinforcing downward momentum. Conversely, punching through $0.2 to $5 might squeeze the shorts, forcing them to buy DOGE to cover and ignite a sharp short squeeze rally. Put another way, DOGE is in a tug of war. If it can lift past $0.2 to $5, rapid buying could emerge, but if sellers thrust it under $0.215, accelerated selling might follow. Traders therefore watch this narrow corridor closely, since a break either way could define the next leg of DOGE's trend. At the moment, the price is consolidating in this band, but the potential energy is high. Technical and sentiment factors lean bullish. Yet the fragile positioning means a swift move in either direction remains possible. Looking beyond pure technicals, broader market forces also play a role. In late August, U.S. Federal Reserve comments helped shift sentiment in the crypto space. Fed Chair Jerome Powell's dovish Jackson Hole remarks fueled a roughly 12% rally in meme coins, in turn lifting Dogecoin as investors rotated into risk assets. Market observers note that expectations of future rate cuts, some speculating as many as 3 by year-end, could flood financial markets with liquidity and trigger a so-called altcoin season. Because Doge often moves in tandem with Bitcoin in the wider crypto market. A strong or stable Bitcoin, for example, above $70,000, would likely give Doge an extra tailwind. In fact, analysts on Binance's research team highlight that macro tailwinds, Fed easing, ETF speculation, etc., could provide fuel for Dogecoin if the general crypto uptrend persists. On the flip side, any broad market downturn or hawkish surprise could undermine the rally. As one Binance report bluntly points out, Dogecoin's price is heavily tied to social media hype and celebrity endorsements, making it susceptible to sharp corrections if sentiment sours. In other words, DOG's fundamental base is not earnings or utility, but community fervor, which can evaporate quickly. This means that even with bullish setups, traders must be aware that a broader risk-off event, for example, a big pullback in stocks, crypto, could send Doge sliding again. Weighing the opportunities against the risks, the near-term outlook for Dogecoin is cautiously optimistic but not guaranteed. The convergence of a bullish technical setup, TD Sequential plus cup handle, overwhelmingly bullish open interest, whale accumulation, and supportive macro conditions has tilted the scales toward buyers at the moment. Immediate hurdles: 0.24 for dollars, $0.277, and avoid triggering a large liquidation wave. There is room for a meaningful rally. Analysts have pointed to a potential 16 to 20% short-term gain to around 19 cents 20 cents upon clearing 18 cents. Setting the stage for that cup and handle breakout and a move toward 42 cents. However, bulls are not out of the woods yet. A failure to hold current support, especially breaking $0.215 decisively, could see Doge drop back to test prior floors, perhaps as low as 17 cents or even 14 cents in a worst case. In sum, the technical and sentiment signals favor a bounce and possible breakout. But they depend on sustained positive conditions. Traders and analysts will be watching key price action around these support-resistance zones, ready to react if the market shifts. For now, Doge's chart leans bullish, but its fate will hinge on both the technical breakouts and the broader market sentiment in the coming days.